Okay, I'm here at HostCon with Drew Hittner. So Drew's got a pretty cool background. He does a lot of lending, but he's also an entrepreneur just like me. Does a lot of short terms, has some long terms. So man, tell me what's new in your business? You were just having a cool conversation inside.
Yeah, so personally, what I've realized in my business is I like helping other entrepreneurs more than anything else. And I feel like just being in the room with those type of people is my superpower. It's so easy to relate to those type of people. And I'm like, well, I've been an Airbnb superhost since 2015. Those guests typically aren't my favorite people to deal with, just to be frank. And so what I've done is I've lowered some of my property count because I want to focus on the A-class properties and then put more of my effort into just helping more people secure loans, especially in the entrepreneurial space, because a lot of entrepreneurs don't think they qualify for good loans.
That's my favorite part, right? So a lot of people think you have to have this amazing W-2 job to be able to qualify for loans. One of my favorite things about Drew is Drew helps people who don't necessarily check that box, right? But how do you do it? How do you work with these people?
So the reason I love helping the self-employed people is because they've been told no by so many. And the reason is because the conventional way to underwrite self-employed is they take the net or the AGI number off their tax returns. There's a way to underwrite these loans now where you take the gross, just like you would take the gross off of a W-2. So the W-2 number is the gross.
That's right.
So once a entrepreneur, contractor, business person knows that, my question is typically, the conversation is always like this. Casey, how much money did you bring in to the business? It's like, well, my net, like, no, I know you're used to talking to other lenders, but like, it's literally the number that comes in the door. If it's $1 million and you write off $1.1 million, guess what? You're still going to qualify. We're going to be able to use $83,000 a month to qualify you, right? Because that's, $1 million divided by 12. And then you're going to qualify. You don't think you qualify for that one house. You would actually qualify to probably buy 4 of those houses. So you're going to be overqualified. Now, the rates are just slightly different, but not massively different. All just depends on the down payment. But the great thing is it's still 30-year debt, and it's very feasible for somebody that's a high net worth or high income earner, even if you're self-employed. So it's just the myth. If you're self-employed, you don't always have to go back to your CPA to try to have that back and forth on like, how much income should I show? No, that's not what I tell the CPAs. I'm like, do whatever you can to help them fight Uncle Sam, and just know that we can use the gross number. All I care about is the big number of income.
Yes, guys, if you didn't hear that, that is gold, all right? I've always call it the double-edged sword. It's like, well, you're either gonna write it all off and not claim any income, or you're going to show a bunch of income to get loans. What Drew's saying now is you can actually take the write-offs if you have the right mortgage broker. So why don't more people do this?
It's just not prevalent. So a lot of there's so many loans that are out there right now being originated. 90% of them are going to be your government loans, right? So the government loans, FHA, conventional, VA, USDA, they don't allow you to use that gross number I was just talking about. They make you use the net because they don't want you to take a government subsidized lending product and then also not pay the government on the tax returns, right? And so that's okay. You just do a non-government loan that allows you to do that. And the reason people don't know about it is because, me included, I didn't know about it until I was a few years in the industry. And the stigma of doing a self-employed or an entrepreneur loan is like, oh great, here goes all the paperwork, and it's death by a million paper cuts. But as long as you learn the guidelines and the underwriting processes, it's literally just as easy. All you need is 12 bank statements. We don't need a 1099. We don't need a K-1. We don't need any of the tax returns. Keep that in your email inbox. The lender doesn't need it. We can close a loan for 10% down on a primary.
Got it. Love it. So one of the other challenges as an entrepreneur is our cash flow, right? We ride this roller coaster, right? So how do you mitigate that and have a liquidity? Because that's immediately when I think about 12 months of statements, it's like, man, you're going to see some months that are great, other months are down.
So that's more of like a real estate investor entrepreneur. So same thing is, it's a 12-month look back, or you could do a 24-month look back. So what I would say is whatever you think gives you the highest average, because if you had 1 month where you brought in a legitimate $1 million out of the last 12, well, guess what? That still averages to $83,000 a month, right? So that's why they ask for that many statements, is to help create that median or that average.
Got it.
Great question.
Yeah, and they're more just to clarify, they're more looking at your gross revenue across 12 months to see the consistency.
Yep. And so to break that down one little further. So if you're one of my clients, you just came to me with that. I'm like, okay, so is that your cash cow business? Is your cash cow business the income you receive from rentals? Or do you have a construction company that does $4 million a year? And if that's the case, let's just leave the rental income out of the picture and only use the construction company.
Wow. So you can kind of pick and choose what income.
Exactly.
Even that's huge, because again, a lot of people run a business that has a lot of write-offs and doesn't bring in it, but it might be your buy and hold, right? Your buy and hold is typically not throwing off a ton of cash flow, depending on where you're at, versus your fixing and flipping or your wholesaling company. So you can kind of strategically do that.
Combine both, right?
Yeah.
You know, like I always say, less is more. So if you have a cash cow company, let's use that. Like I know that everybody that does a loan, it's death by a million paper cuts. So I would just cut you one less time, right?
There
so
you go.
I don't want to see all that unless we need to see all that to make sure you get the loan that you want.
Okay. So Drew, what's the best thing? So I think this is going to completely mind shift a bunch of people. So how can they actually, somebody's listening, they're an entrepreneur, they've been told that they can't get loans. They're like, all right, I'm going to do it. What's their first step?
I think the easiest is social media at Drew Do Loans.
Okay.
So DREWDO Loans. And there is a Drew Does Loans. That's not me, but they're Drew Do Loans. And just book a consultation call with me or a quick phone call. My Calendly link is in the link in the bio, so it'll be me. You might have one of my assistants help coordinate some time if something on the schedule doesn't work out. But that's what we do. We have the loan consultation, and then that's kind of like the discovery call. Like, what do you want? Like, when you put your head on the pillow and you're thinking about financing, what is the loan you want? And then maybe that's reality, maybe it's not. We put it all together, and then we start the pre-approval process. And then once you're pre-approved by sending us documents, then we have a clear mortgage plan call where I'm like, you get to choose your own rates. You can get this rate, or this rate. And then we go through what the differences are and why somebody might actually choose a higher rate compared to the lowest rate that's available on the rate sheet. So, and it's kind of educational. And then, we ask for the business just like anybody else should. But we want to make sure that we're a great fit for the borrower.
Yeah, I like it, guys. And I talk in a lot of my videos about getting to know your lender, right? Get to know your small banks. Just like that's how I've gotten to know Drew. I picked his brain. Even if you just do that consultation, what I love about it, even if it doesn't work, Drew's going to educate you just like he is now. You're going to learn a little bit more and just continue, see if it's a fit. And if it's not a fit, at least you're going to learn something. Be able to start to apply this and do what you need to do.
Yeah, it's just, I'm of the mentality that you just give it all away. Yeah. And then I don't expect for anything to actually happen. And as long as you ask for the business, you're transparent about fees, rates, terms, pricing, then everybody wants to work with somebody that's relatable. And, I'm an entrepreneur with Airbnbs. And so we happen to be at an Airbnb conference. So that's very relatable to a lot of people. And, if we need to talk about Price Labs and Logify and how to dynamically set up a listing to make you a top 5%er and in that given market, we can talk that too. But, my bread and butter has always been mortgage and just helping people figure out lending situations because everybody runs out of capital. If that wasn't the case, there wouldn't be mortgages. So.
That's right. I love it. Well, guys, yeah, I heard you got to do something to get out there. You got to be talking to the right lenders, guys like Drew, to ultimately go and achieve your real estate goals.